Hello, Culture Matters podcast. Buckle up. You're in for a treat today. I'm going to introduce you to a friend of mine in the Culture Matters podcast. They've been on the show before. And before I do that, here's a quote I picked just for this episode. The limits of my language mean the limits of my world. Ludwig Wittgenstein.
Yeah.
Our guest today is a friend of the Culture Matters podcast. If you haven't listened to episode 845, invest the time. You got to get over there after this. Brian Vieaux, friend of the show, has introduced some awesome guests like Scott Shang. He's been, I would say, a leader and in showing how to do it for many decades now in the mortgage industry in many different contexts. On the President of Finlocker to today, actually President of MISMO, which is revolutionizing the industry in its own way. I can't wait to learn
Yeah.
about MISMO. Brian, thanks for coming on the show, and it's always great to see you in person at the different cultures.
Yes. Yeah, Jay. Thanks for having me on. Yeah, I love seeing you down in Florida at the Lenders One event. And I think that's when I suggested you connect with Scott and here we are doing this again. I'm excited to be here.
I'm I picked that quote because from my preparation, it seems as though there's a relationship with MISMO and its purpose with language in the mortgage industry.
Yeah.
Can you unpack that a bit for us that our listeners, many mortgage and mortgage related industries listen to the show.
Yeah, and this may be applicable to outside of mortgage as well, but um, specific to the mortgage industry, when a mortgage company manufactures a mortgage loan, right, for a borrower, for a consumer, there is a myriad of technology platforms that loan passes through as it goes through that manufacturing process. I don't know about you, Jay, but when I was younger, I used to love when my parents would go to get a car wash and you could actually get out of the car and then the car would go through the car wash and you'd walk down this windowed wall and follow your car through the car wash. That was like high tech back in my day. I think I have a few years on you, so I don't know if that was a big thing for
I
you.
was that one of these.
There you go. So the mortgage loan application for a consumer goes through its own car wash type phase, right? The manufacturing process passes from point of sale to a loan origination system to an underwriting engine to a doc doc generation platform. Certainly, email platforms are used to convey, information back and forth. And before MISMO existed, which was 26 years ago when MISMO was formed, but before MISMO existed, imagine, hundreds of different mortgage companies, probably thousands, but hundreds of different mortgage companies, each with its own unique stack of technology and tools, and each literally doing its own thing. And so, when you try to think about moving a loan from lender A to an aggregator, a buyer of a loan, to then a servicer of a loan, and then to the Fannie Mae or Freddie Mac who make liquidity available to fund the loan. And if there wasn't like one set of data standards to move those loans, the cost to produce a loan would be even worse than it is today, which is pretty bad right now at like almost $12,000 a loan. So you'll hear us talk about MISMO being the language of lending. That's probably what you saw on our website. And that language is in the form of data sets and data standards. And that language is understood and spoken by the various technology platforms that exist to serve the industry.
What are some of so the average originator, should they know about MISMO and why, if so?
I love that question. And I'm 6 months into my tenure as president, and I'm going to be like transparent and honest with you here. A year ago, I couldn't have told you what all the letters in MISMO means, right? So MISMO is an acronym, And the long form name of our organization is the Mortgage Industry Standards Maintenance Organization. Sure is a lot easier just to call it MISMO. um,
I love this.
but a year ago, I could have told you that the word mortgage was probably in there, and that was probably about all I could tell you. And now that I'm, well immersed into all things MISMO, including the hundreds plus standards that have been created and curated over time, I'm more convinced today than ever that the average loan officer that squares off with consumers should know about MISMO.
Well, why?
Um, because to me, it demonstrates proficiency and expertise in your industry. The more you can speak to how data moves, how a consumer's data moves. And, you know, it seems like today, Jay, you can't pick up a news wire or an article without running across a data breach, a cybersecurity breach, a risk of data being kind of stolen. And if I'm a loan officer trying to present as this trustworthy financial professional, the consumer. So if you were my borrower, Jay, and you didn't know me from Adam, you would just you were referred to me by a realtor. That's still how a lot of the process works today. Um, how comfortable are you that you're about to literally give me all the information about your financial well-being in the form of this mortgage application and supporting documentation? Would you be more or less comfortable if you knew that I was proficient in how data moves through the manufacturing process from platform A to platform B all the way to platform Z, and if I could speak to you in a way that gave you comfort that your data was safe with me as your financial professional? And I think too many loan officers race to the rate, to the cost, to get to get to secure a borrower versus building trust, at the onset.
I think I want to work with somebody that I think knows what they're doing.
Yeah.
Are you making the claim that someone that knows what MISMO is will know more of what they're doing?
I'm
Or
saying yes. Yes, that's one thing that every loan officer should know happens in our industry because I do believe it makes them more informed and a better resource.
how do you view standards? Do you view them in a different way than you did years ago
I
based
do.
on this experience? Because we're on
I
the
do.
Culture Matters podcast, we better talk about standards.
Yeah, I mean, I took them for granted. Like I like I believe now that I'm in this role, I think the majority of the humans in our industry take them for granted, right? Um, you know, most of the loan origination system LOS platforms, most of the loan servicing platforms, certainly most, if not all, of the closing document generation platforms all rely on MISMO standards to move data in and out of their platforms. But the average, mortgage professional, they're not the loan officer's not necessarily, packaging the data in a format. They just input it, or the consumer in most cases clicks a link, fills out, an online application. The data from that online application gets packaged in a format, typically a MISMO or a Fannie Mae 3.4. It's what most loan officers are familiar with. That's an example of a standard. So every loan that gets made in the United States, I'll say this, maybe it's not every loan, 99.9% of the mortgage loans that get made in the United States start with the same standard, which is that MISMO 3.4. And so that's what allows, and I know you're familiar with the mortgage broker channel. Our
Yeah.
mutual friend Eddie
Yeah.
Perez and EPM Mortgage are one of the leaders in that space. That standard 3.4 MISMO file is what allows a broker to be a broker and have access to EPM and Rocket Pro and UWM and others, because that application that they complete for the consumer is literally portable. They can send that same data set to those three, four, five wholesale lenders and truly shop for the best deal for their consumer.
And that was something MISMO created?
Yeah, yeah. So I briefly hit this. So 26 years ago, MISMO was formed by the Mortgage Bankers Association. So we still are a wholly owned subsidiary of the Mortgage Bankers Association. But 26 years ago, 26 plus years ago, a group of leaders within the Mortgage Bankers Association had the foresight to realize there's got to be a better way to gain efficiency in our industry. Um, and for a long time, like I started in the business in 1991, and the company I worked for was not unlike most other mortgage companies in that we literally built our own operating systems, our own technology. And, you know, when we built our loan application, we called the consumer, we called them borrower first name, borrower last name. But you could go down the street to another lender who built their own system, and they might call it customer first name or customer name, comma, last. And so imagine hundreds of companies taking the exact same data point, Brian, my first name, and labeling it uniquely for their organization. You, it's chaos, right?
Yeah.
And so that's an example of one data point, the first name of the applicant, the borrower, the customer, the client, that we've standardized to call it something. I think it's borrower first name. And so every lender that follows the MISMO standards, when they label that field, it's labeled the same way. So that whoever, like a broker now, when they submit a data file, Eddie can ingest it because he knows what that field means.
What, in 2000, how many people came together to create this?
Boy, that's a really good question. I don't know the exact number. I think it was probably less than 5 or 10. And it was probably, this is me speculating a little bit, but I recall this as being in the industry. This conversation going on. It was a couple of the leading technology platforms literally did come together to do something better for the industry, even though it might have broken their moat, right? That they would have their uniqueness that they may have had. They believe that standardizing sets of data is ultimately what's good and better for the industry.
I
Another
was
another example, because
visualizing.
I know you're
Go
familiar
ahead.
with you're familiar with Fannie Mae, Freddie Mac.
Yeah.
So virtually every loan that gets originated gets submitted to one of those, either Fannie or Freddie, sometimes both, for underwriting, right? And it's submitted, the data for a loan is submitted to the automated underwriting engine referred to as AUS. About 10 years ago, Fannie and Freddie's regulator, FHFA, Finance Housing, Federal Finance Housing Association. Boy, I'm drawing a blank on that, but FHFA, headed today by Bill Pulte, about a dozen years ago, 10 to 12 years ago, FHFA mandated that Fannie and Freddie come together and create their own standards so that if I'm a lender and I'm doing a conventional loan, I should be able to have the data packaged in a way that when that loan's ready to be delivered to either Fannie or Freddie, based on the data standards, I could select in the back end who I want to sell it to, right? Fannie or Freddie. And that only happened when FHFA mandated that they come together to create this fungible loan and then create these data standards. So look, your mortgage professionals who are watching and listening, they'll know the U's, the uniform. There's a set of U's underneath Fannie and Freddie. They're the uniform, blah, blah, blah. So there's like the uniform closing data set, the uniform appraisal data set. Those those dozen or so U's that exist inside of Fannie and Freddie and that are required to be followed by lenders in order to submit a loan to the AUS of either Fannie or Freddie and to sell a loan to Fannie or Freddie, all are built on the MISMO reference model. So they're examples of standards created within the MISMO model to better serve our industry. And the value really there is extracting more liquidity for lenders, which then translates into available funds for home buyers.
Mhm. When it came to actually creating these standards, is this the Hunger Games? What is there a gauntlet? Are
It's a
there
great question. It's a
yeah, I have a lot of questions.
Yeah.
How do
So,
you come up with a standard?
man, I love the way your brain works because you're like asking the important questions
Well,
that.
I just got to show you. I might have a reel live in the house. I gotta be quiet because I think my wife's working downstairs, but
Mhm.
I got a real picture of the founding of MISMO.
Oh, no way.
Yeah.
There it is. There it is.
For
That's the
anybody that's
thumbnail for this
watching on
episode.
YouTube, I just found there's pictures all over the house, thinkers,
That's beautiful.
Abraham Lincoln, and I got 30 Days of Thought there, Leonardo.
Yeah.
Anyway, so Nietzsche.
Amazing.
But I got the Declaration over there. That's what I vision when I'm thinking about MISMO. Was
That
there
would
a
be
moment where you got the people starting this thing? And
that
I'm
would be
jumping
a
around here, but
that how about that? That would be a fun video YouTube to make, like the reenacting the beginning of MISMO. So your question is a great one, right? Um, we're a standards body. We're recognized federally as a standards body. So we're a nonprofit with a special designation as a standards body, which has certain requirements of us, right? We're a nonprofit. We serve the housing finance industry or ecosystem, I like to say. And so when MISMO creates standards, we have to make them available to the entire ecosystem outside of a paywall, right? Now, we do that because we have to, but we also do that because it's the right thing to do to serve the industry. But we also have some member value as well. We'll get to that later. But in order to become a recognized standards body, you have to have a very robust governance oversight infrastructure. So I'm not going to name all the committees and whatnot, but I'll start by saying this because this will give you a flavor. There's only 6 humans that go to work every day with the MISMO, name tag on our shirt. So only 6 of us employed by MISMO, the business, the organization. There's another 10 to 12 contractors that we hire that act as facilitators for the 34 unique work groups that exist today across the MISMO community. And now the community. What does that word community mean? So this is the beauty of what we are. There's about at any given time 600 humans that represent all the cross section of mortgage finance that come together across those 30, 34 work groups that I discussed, that work product, all volunteering their time, their expertise. They typically are subject matter experts,
hmm.
um, and in their experience. So they're volunteering time, experience, and expertise that at the human level. Take it up a layer, and the companies they work for are supporting that volunteerism. And so, what does that volunteerism look like? Let's just pick one work product. We have today we have a work group called the Mortgage Compliance Data Set. They've been working for 3 years on creating this data set. I think there might be 1,000 data points in this data set, maybe even more.
Wow.
And they cover the gamut of the mortgage process because it's a compliance data set. It's in theory it'll be the data set. This data set will be used to test loans that lenders originated. The testing will be done by state regulators, as an example. But it took 3 years of this work group that had at any given time 30 to 50 experts in the group, lawyers, legal experts, compliance risk experts, technologists, state regulators were in the room as these standards were agreed upon. And so there's a very thorough vetting process inside the work group. to get to a place where they are ready to submit their product to the first level of governance within the MISMO ecosystem, which there's another set of volunteers that cover all the different work groups that sit on our one of our governance bodies, which actually ultimately reviews and approves the standard for publication. But before that even happens, because we're a standards body for the industry, we publish the standard to the industry and put it out for public comment, typically for 30 days. So it's open to the industry to comment on this potential standard. And then if there's if any comments come in, those are all vetted and mediated. Typically, there's not many comments, and then it goes and gets approved. And then before it actually gets published, it goes through a period of time where that we need to have somebody, a company or two adopt the standard and start to kind of test it. So very rigorous process. We have an independent board of directors that I report to, and they represent the industry. And so to your point, this is not Hunger Games. It's not even Game of Thrones. It's more like the picture you showed us. There was a process for that picture you showed us effectively has built our governance as a country.
That was this for those that aren't watching on YouTube. That was the silent signing of the Declaration.
That was the first standard.
When you think about the mortgage industry culture today, is MISMO uh, coming to the forefront or at the on the becoming more, or is MISMO at the forefront because the mortgage industry culture is in need of discussion around who we are, what we are? I want to ask you about that. I want to go
Yeah.
in that direction because my take is that it's unclear what the industry is today.
Yeah, I think it is, and I've been in it for 37 years now. um, and there's pockets within the industry where I think you can touch and feel culture, like the Mortgage Bankers Association, the MBA, right? It's our largest representative trade association. There's that community that makes up MBA, which consists of staffers, but the vast majority of that community are members, which are the humans that represent the mortgage companies, the mortgage technologists that serve the industry. And I would tell you, Jay, that like I think the culture that emanates from that set of our industry is highly focused on the consumer. At the end of the day, is ultimately focused on doing right by consumers, by home buyers, by homeowners. And so I think if there's a single North Star that community kind of operates on is what's best for the consumer.
Okay, so then what so what's your take on what the question of what's best for the consumer versus what's best for us? Because to me that's and if that's when I'm thinking I'm having the president of MISMO on here, you're talking about
Yeah.
standards and an agreed upon language for information to flow through the system. I feel like this is a very enlightening conversation for anyone in the mortgage industry that wants to level up their consciousness as it relates to the mortgage
Yeah.
industry. Because you said something earlier about being that's how I took it, being that advisor. I know someone's been on the show a couple times. I think Barry Beebe has made the whole industry an advisor. It's the
That's
same
right.
team, right?
Yes.
That's a unique selling proposition that thousands of people pay to
Yes.
pay attention to information. I think you're making that's implicit in this conversation. It's like, hey, you should know what MISMO is. This is like the the what the invis Nietzsche said the invisible threads are the strongest ties. that's held.
Oh
Okay.
man.
So my question is like, what's your take as a MISMO representative here, the Justice League with your five other, Superman and all that? Um, you said they're thinking about the borrowers. Well, what about this conversation of thinking about us? When I say us,
Yeah.
there's
So
different ways to do the business, and there's a narrative there.
do they have to be mutually exclusive? I don't think they do. I
Can
think
you
you can,
elaborate on that,
yeah,
the leader?
let's just say I'm a independent mortgage broker, right? I serve my community in Novi, Michigan. Um, is it and I'm a mission oriented loan originator mortgage broker, meaning I truly am looking to make my community better by promoting and being a conduit for home ownership because I believe that homeowners make better neighbors versus renters, just to throw it out there, right? So I'm mission oriented on home ownership, and I'm ultimately I want to put my customers, my clients, in the best financial place I can do for them. So I'm going to be their advocate to find the best mortgage loan program or product for their particular situation, right? Um, Example, a first-time home buyer who comes to me and says, I've been renting for 5 years. I want to own this home. I found a home that I can afford. It's not my dream home, but it's one I can afford. I'm ready to do that. But my plan is to only own this home for 5 years because I'm going to move to Naples, Florida, where my friend Jay lives. So if I'm an advisor, a financial advisor as a loan officer, do I just go right to the 30-year fixed rate loan? Or recognizing what their objectives are, they're going to be only in this home for 5 years. Do we consider a 5-year arm as an example? So I'm using product as an example of advocating for the consumer. So that's one kind of path,
Mm.
making sure that they are in the best financial position possible based on loan program products, et cetera. On the other side of it, there's a recent published data point that says the average cost to get a loan for a consumer is pushing to $12,000. So that's like the cost of appraisal, title, credit. Of course, there's the cost of the loan officer, the loan officer's commission, the lender's profit margins, all in there. But there's a lot of cost, and there's a lot of cost because there's inefficiency still across the ecosystem. So what if fully leveraging a set of data standards and as a broker partnering with wholesale lenders and technology platforms that truly adopt these standards? What if instead of my cost to my borrower being 12,000 because I'm fully leveraging all these standards and these partners that leverage standards, maybe my cost is 7,500, which is significant when you consider a first-time home buyer, $4,500, $5,000, that could go a long way towards their down payment, right?
So are you seeing more small business growth in the future and communities or architectures like MISMO are helping support those small business owners?
I do think that one of the reasons we see the mortgage broker channel growing as fast as it is. It's not all about MISMO, by the way, but we're a part of that process because we've made it easier for the wholesale lenders to to rely on a standard set of packaged data from brokers, and so they don't have to do custom builds to map to these data sets. Everything's already wired to
Well,
those
I
standards.
want to highlight that because from a culture perspective, part of what organizations give to people is accountability
Yes.
through structure and roles. The organization creates efficient. If I plug into a company,
Yeah.
I'm going to be a consultant, or consultants work for Jay.
Yeah.
I've done all a lot of all the reading and the writing and the working with over a decade and a half that somebody could plug in. That's part of the why they'd want to plug in is like what
Yeah,
I've had to suffer.
that's right. Yeah, yeah, yeah.
But part of that, but there's accountability, right? They'd have to live to the expectation I have of them. So
Yes.
I'm saying if you're saying the broker channel is growing and you're part of that architecture because the standards is part of how they can people could take that responsibility on independently.
Yeah.
That's what's happening in the industry. So that's I want to unpack that a little bit because yeah, I'm not plugging you. I'm more interested in
I love that.
the standards create are a part of accountability. So people could be more so people can be more responsible.
Yes. I think I would say indirectly, and in some cases probably directly, that is exactly right. I think it's
So
exactly right.
we ended up here because I was asking you about that the attention basically, like serving two masters, the customer versus ourselves.
Yeah.
And how does that actually what does that mean about the culture of the mortgage industry today? If I'm talking
Mm,
to you said there's six people and then 600 contributors that are providing their expertise and their time and their experience in these carefully thought through hubs of intellectual property.
yeah.
That's very powerful in a right. It could be very
Yeah.
helpful. Um, what's the identity of the mortgage industry today? Or is it borrower focused? Or you said it doesn't have to be mutually exclusive. Okay, so that's the million-dollar question. How? Or what do you mean by that?
So I believe that doing best for a consumer, and by the way, best doesn't always mean the lowest rate, the lowest cost, because there's always going to be someone with a lower rate and lower costs, right? But that lower rate and lower cost may come with significantly less experience and expertise. And so let's take my example of that first time home buyer. And I suggested that based on their objective of only being in the house for 5 years, that they take a 5 year arm to begin because effectively that rate would generate a lower payment through those 5 years. And even when it adjusts at the end of the 5 years, if they're following their timeline, they're already moving on. They're not going to get impacted by that adjustment. So now the inverse is I'm a loan officer. I look at the 5 year arm on my rate sheet, and let's just say it's a 0.5% lower than the 30-year fixed rate. So if the 30-year fixed rate's on my rate sheet at 6.5%, and this 5 year arm is 6%, I'm gonna give you the lowest rate possible, borrower, and this is it. It's the 6% 5 year arm. But I don't ask any more questions. I don't ask you how long do you plan on living in the home? All the stuff that really is going to come into whether that's actually a good program or a good product. Yeah, it's a great rate, but it may not be the right product. But I quote unquote jam you in because you were shopping, you only cared about the lowest rate. And now fast forward 8 years, your loan that started at 6% has now adjusted up to 7.5 or 8, depending on whatever's going on in the market. And you call me and say, Brian, what the heck, man? It's not what you told me. You told me I was going to get the lowest rate, right? But there was no advice. It was lowest rate wins. And so my point here is you can't just equate what's best for a consumer with the lowest cost or lowest rate. I actually think you're in some ways as a home buyer and homeowner, you should pay a little bit of a premium for that expertise. Um,
I wrote
uh,
down, I'm not the lowest cost, I'm the highest value.
there you go. You got it.
Who benefits when standards exist and who quietly resists?
I okay, we're gonna go here. I like this. Everybody benefits when standards exist in our ecosystem, especially standards that are mandated, as I described, those Fannie Mae, Freddie Mac standards. Those are mandated. If you're going to originate a loan and ultimately sell it to Fannie Mae, Freddie Mac, you have to follow their They're prescribed standards. Everybody benefits from those standards. Who resists? Great question. So today, as an organization, MISMO is funded by the industry. And we have there's two principal funding mechanisms. There's the technology platform providers, some would call them vendors, right? Providers, platforms. They pay they become members of MISMO at various levels based on what they're trying to accomplish with their product, et cetera, et cetera. And that membership for those platforms unlocks their access to all of the data and the specs and the guidelines and the implementation instructions, if you will, to all these data sets and standards. So a technology platform that becomes a member of MISMO can literally, when they're building product technology to serve the industry, they're connecting directly through these standards and these data sets. So that's pretty straightforward, that funding component. The other significant funding component are the lenders who benefit greatly from all these standards and from their technology partners that leverage the standards to build product. The lenders are asked to participate in the funding of their nonprofit, of the industry's nonprofit, through this mechanism we call the Innovation Investment Fund. And it's 75 cents for every loan that a lender originates. They're asked to, pay their quote unquote share, if you will, to support the industry. 75 cents a loan, pretty small, I'll call it inconsequential. It's not even a dollar, right? Less than a dollar. And so who resists? Sadly, probably still 50% of the lenders don't fund through the IIF. Now, to their defense, some of them have not funded historically because they didn't have awareness. And that's part of why I'm so appreciative of this opportunity to raise and talk about, the value and the work that we do. But others, I think, recognize the value and just don't feel like it's their responsibility to fund. And that's wrong. Frankly, it's wrong. And so
Why?
we're doing
Why?
everything we
Why?
can to raise awareness, to speak to the value that gets created across these standards, why it's important, how it actually drives like real ROI in these shops. But there'll still be some that will resist, but yet they'll still benefit, and that's what's wrong.
Is this culture expressed through data?
So that's part of our part of what we have to do better as an organization is to leverage data to tell a better story and to actually show that MISMO matters, that standards matter. And so, we're being more intentional within the work groups today in parallel, as we develop a particular standard within the work group, we're holding that group accountable to be able to tell the story of the value, that why this matters. When this standard is done, why is it going to be impactful? Why is it going to matter? What are the economic benefits for industry and the participants when they're using this standard? We didn't do that all the time. Now we're doing that.
How do you enforce?
Yeah, it's we can't. We enforce. I think earlier in the show we talked about it is part of being a recognized standards body. We have to make our standards available to the entire ecosystem outside of a paywall. And so one of the things we do to enforce is what we make available on the general website in terms of standards, we make available in a certain format, XML. So XML at one time was the most modern data structure. Since then, there's JSON formats, and there's going to be new formats coming with how fast.
I just laugh because I envisioned Mismo like this robot guy flipping over tables, like
I
you don't
love
get
that.
the Mismo standard. eating people's fish out of fish bowls.
You remember? You
I don't want
ever?
Bismo showing up at my place. I mean, like you see the John Wick movie where the auditor shows up.
Yes, yes,
I don't know which one. Maybe that's the third one. Hey, we got to close this place down.
yeah.
Um,
So our enforcement's it's not heavy-handed because it can't be because we have to make available. But if you want access to the JSON data structure for these standards, though, that's behind a paywall, behind membership. And what's really going to be cool, Jay, is we haven't even. It's been 45 minutes and we haven't said the two letters AI yet.
I have so many questions. If you're willing, I'd love this be a part one and two.
Oh, heck yeah.
I mean, because what seems to be so this is where my I'm passionate about what you're doing. So you said start in 2000. My take is that you can't actually have two masters. It has to be it can be both. It can be both. It's not an either
Yeah.
or a both and, but both either or and both and. And I
Yeah.
learned that from McGilchrist, who's been on the show. I really, he's a brilliant like world thinker. Um, and what I mean by is if we spend so much of our time worrying about ourselves, it's like everyone just imagine a house, everyone is bickering and just throwing plates and it's like just imagine a nightmare Thanksgiving meal. Plates are thrown
Sounds
and
like
no
fun,
one
actually.
see. Okay, little fun. Yeah, lighthearted, let's say. But no one is realized that the house is on fire.
Oh, yeah. Yeah. Yeah.
And but somebody finally looks out the window and says, "Oh my God, the neighbor's house is on fire. We should go help them." And then goes out of the house to go get the buckets. And when they get across the street and they're trying to do that, throw the water, and the other neighbors in that house, everyone was doing the same thing. But then they recognized outside that their neighbor across the street, their house was on fire. And so they went out of the house and throwing water on their house.
Yeah.
Um, this metaphor hopefully hits for the audience because I'm chasing it. But um, what I like about what MISMO is, what I'm inspired about the idea of standards is how do you have a culture without standards?
Yeah. Are you an NFL football guy?
My wife's an Eagles fan.
Oh, fly. So I think it was the Pittsburgh Steelers head coach Mike Tomlin. Now, you can joke about it now because he got fired, but he would say the standard is the standard, right? When he would address his team starting in, spring practice, the first time they're doing their optional workouts, the standard is the standard. And that just he just would beat that into these guys. And meaning if it's April and we don't play our first real football game until September, but we're doing a workout or we're doing a drill right now, we're doing it in April ultimately to prepare for that game we're going to play in September. And the standard to win that game in September is the standard. It's going to take what it's going to take. So if you do anything less than the standard in this drill in April, it's not going to show up for you in September, right? So it's
You
this.
argued in your book, loan officers are becoming financial educators. What does that say about the gaps in the system in your view?
Well, I think there's systemic gaps in terms of financial literacy, right? I went when I went to high school, we actually had a economics course. It was a required class that you learned the basics of economics, like how to write a check, how to balance a checkbook, stuff, how to build a budget. Now all that's like it doesn't happen. It just they don't the kids coming up today through school are not getting taught, and frankly households aren't doing a great job teaching the young people. younger people. I sound like an old, get off my lawn guy. Um, and so I think inherently we have this financial literacy gap, and then it's exacerbated when we talk about someone that's thinking about buying a home. They're not ready to buy a home today, but they're thinking about getting ready.
I love
Where
that. Thinking about.
where do they start? Well, most of them today will start on Chat GPT or some other, LLM or Google or whatever. YouTube, they'll spend a lot of time watching and learning on YouTube. And I firmly believe that the single best resource for financial education slash preparation specific to home buying is a loan officer. But for years, decades in our business, the home buyer didn't get introduced to a loan officer until they already wrote a contract to buy a home. And now it's like, it's a little too late, right? And imagine a world where I'm 22 years old, but my goal is to buy a home when I'm 25. And so I find a loan officer that I want to work with when I'm 22, who's going to guide me as as my own financial Sherpa to mortgage readiness and home ownership. It's a far reach. It happens a little bit in our industry, but imagine that world. And as a loan officer, that's a pretty powerful relationship you've built for 2, 3 years before they even make take a loan, begin the loan application process.
You think the industry is moving fast enough to evolve to the next generation buyer?
I think the technology is. I don't know. I think part of the problem is as an industry, we don't really communicate from the industry to through the media to consumers. We kind of leave that to each logo, each brand. And the reality of it is there's only less than a handful of brands that could do that at any kind of scale. And so you get outside of those five brands, whoever they are, and now you're left with the small, mid-size enterprise mortgage companies, the mortgage brokers, the community-based. They can't really do anything at scale from a marketing perspective because it's so expensive. So they really have to be. It's really a grassroots effort, I think, to become known in your community as this trusted resource. I don't know if I answer your question, but
You have MISMO events.
we do. We host 3 in-person events per year. We call them summits. And the primary objective of those summits is those I mentioned these work groups, these bodies of experts and volunteers that come together to solve industry problems, typically by creating a standard. They meet every month as a group virtually. Sometimes they meet more than once a month. And we bring them together or give them the opportunity to come together 3 times a year to do their meetings. And it's pretty inspiring to walk the halls of these workshops that are happening, these work groups, and I'll just pop in and out because I'm not part of any of the work groups. I don't I'm not in the work groups. My team provides the rails for these work groups to exist and can we say shit? Oh, I just said it. Get shit done.
Yeah.
um,
It
so
sounds
yeah,
like MISMO is infrastructure that everyone benefits from. Not everyone takes responsibility for, but
that's
not
right.
everyone takes responsibility for.
True.
What does that reveal about the culture of the industry?
I think it's a black eye. I think it's a black eye. I think it reveals that outside of those pockets, the subsets I described, like MBA being one of those, the MBA community, and there's not to so there's the mortgage brokers have their own communities, right? Either through National Association of Mortgage Brokers (NAM) or the Association of Independent Mortgage Experts (AIM). Those communities kind of exist, but then you see, I mean, I don't know, in the last 90 days, I've picked up a Housing Wire National Mortgage Professional article that talks about lender A suing lender B for poaching, their loan officers and stealing trade secrets or whatever, right? So, and that's like all public facing. Like consumers are seeing that stuff. What do you think the consumers are thinking about our culture as an industry when they see that stuff? Does that instill trust? I don't think so.
If I'm a loan officer listening to this conversation, what's one thing that I could start doing differently tomorrow that reflects a deeper understanding of my business, my profession, the industry?
Um, so start with education. Start by being better educated. And there's a lot of great mortgage loan officer coaches. And I'm not talking about like sales education, guys. I'm saying go to your company first. Does your company have, any kind of industry access to industry education? So if your company happens to be a member of the Mortgage Bankers Association, by extension, you as a loan officer are a member of MBA and you have access to all the power of the MBA education library. So you may be super proficient on the manufacturing of a loan to get it through underwriting, but are you proficient on speaking to capital markets? How does how does a rate sheet how does a rate sheet get created and built every day, and how does that translate into the consumer? Do you need that to be a good loan officer? No. But if you knew that, would it make you a more informed loan officer? And when your customer, your prospect is asking you questions about what you think rates are going to do, you can ask it, you can answer in an intelligible way. You brought up Barry Habib. Barry's the master of teaching the teachers on how to be a better advisor. So find your own Barry or go to Barry and be educated better on the markets, the capital markets, and how they impact our business day to day. Um, do you understand loan servicing? Why is that important? I literally today got a letter in the mail from PNC Bank saying, "Congratulations, your loan is being going to be transferred." I'm in the business, so I know I'm like, "Oh, that's my hello letter."
Yeah.
I didn't get my goodbye letter from my servicer, but the average consumer is going to be like, "What is this a scam? What do you mean what do you mean?" So understand the full servicing gamut and be that advisor to your customer, and
Mm.
not just being ready when they have a question, but if you engage with them through 6 or 12 months before they're ready to buy, you're teaching them all the way through what to expect. And guess what, guys? When you lean in to people that way and you build trust, when they're at a cocktail party, at the barbecue, or their kid's baseball game, and someone talks about buying a home and do you know a guy, you're going to be like, heck yeah, Jay spent a year of time with me before I was even ready to get a loan, buy a home.
Who who do you need to be in front of? Who do you need to speak with? And
I thought 6 months ago when I started, I thought I knew the answer. I thought it was going to be like typically like the CIO, CTO, somebody, some C-suiter on the technology side. I quickly realized 60 days in that it was the entire C-suite because decisions don't necessarily happen in a vacuum, especially a decision like potentially um, funding MISMO through IIF, right? There's a lot of areas of the company that could be impacted. So I've tailored messaging to the broader C-suite, but I also believe that kind of coming at it top down from the C-suite is one path, and then bottoms up from the field, from the street level, from the loan officers and the loan processors. That's another level up. And so, I believe that everybody should know. Jay, I said we have 600 or so experts who volunteer their time in these work groups. How many humans do you think make up the mortgage industry at large?
a few 100,000?
Yeah, it's more than 300,000. And we have 600. doing the work for 300,000 plus.
So if I understand, if you, I'd love to have you back on the show. I think it's an
Yeah, man.
important conversation. If I understand you clearly here, uh, each organization, whether it's an organization of one to thousands, can make a commitment to invest a couple cents
Yeah.
or a couple couples of their cents of each loan back into the industry, which supports them having their businesses to be more efficient.
Yes.
And this is about the culture of the mortgage industry. And you're saying that someone that's listening that is a professional wants to not just argue cost and what they cost, but be of value, is going to be paying attention to these types of conversations if they take their career very seriously. And that to me is a culture conversation, like
I
at
love
every
that.
level,
Yeah.
individual responsibility, organizational culture, industry culture. Am I following the theme here of MISMO? 26 years, it's like going through a renaissance.
Yeah, man. Well, and again, we haven't even gotten to this next episode, I think is going to build on this because, I know you've talked to some of the smartest people around AI, and I think what's always consistent talking to like the AI experts is there's no AI, there's no model that's going to be effective if the foundation that you're built on is shaky. In other words, if your data is bad, the results from your AI are going to be bad, and they're probably going to be bad at scale. And so, getting your foundation in a good, solid place is going to allow you to really effectively, safely scale your and leverage these advanced modern tools, these AI enabled and AI powered tools that are coming to market fast. And MISMO is right in the middle of that.
Brian Vieaux, if you're listening to this podcast, please go to episode 845. Take a deep dive there. What's fastest way people can connect with you?
So you can learn about MISMO at mismo.org. And that's a great place for loan officers to go and just understand kind of the work streams. I'm a LinkedIn guy. So the fastest way easiest way to find me is on LinkedIn. Last name is Vieaux, first name Brian. Connect with me there, message me there, and I'd love to have a conversation.
And pick up the book, Rethink, right? Brian View.
Yeah,
Rethink everything. When Kyle Draper, that's a fun episode too. He's been on the
yeah,
show.
yeah.
If you're listening to this, please leave us a review on the Culture Matters podcast. If you're a professional in the mortgage industry, I would listen to this a couple times. Maybe go look in the mirror and say some mantras out loud. Brian, thanks for coming back to the show. I'm excited to go even deeper.
Thank you, Jay. I appreciate the opportunity.
And we will see you next time.